Ladies and gentlemen, good day and welcome to the Muthoot Capital Q2 and H1 FY24 earnings call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference over to Ms. Shweta Daptardar from Elara Private Limited. Thank you, and over to you, ma'am.
Thank you, Malcolm. Good morning, everyone. On behalf of Elara Capital, we welcome you all to the earnings conference call of Muthoot Capital Services to discuss the Q2 and H1 FY24 performance. From the esteemed management, we have with us today Mr. Ramandeep Gill, CFO, Mr. Matthews Marcos, CEO. Without much further ado, I now hand over the call to Mr. Gill for his opening comments, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Thanks, Malcolm. Thanks, Shweta. Very good morning to everyone. Thank you so much for joining this call. To begin with the earnings call, I would like to share few numbers with you as a summary towards my Q2 and the H1 results. We'll start with the operational highlights of the company, wherein we'll deep dive what has actually happened in this quarter. In terms of AUM, we are standing at an AUM 1771 CR. Right, business of the company has gone up. As far as Q1 is concerned, we have done a business of 201 CR, whereas in Q2 we have been able to do 328 CR. The company has a total business size, total clients which has been acquired by the company in this quarter stands at 39,093, which makes our total live base of the clients at 392,747. The company has been successfully able to take the balance sheet size of the company at 2,244 crores. The borrowings of the company stands at 1,586 crores, whereas which has a total average cost of funds at 9.80%. The biggest topic of this company, which we were facing for the last 18 odd months, wherein the GNP of the company was extremely high. We started at March 2022 with a GNP of 25 odd %. Now we are standing at a GNP of 11.67%, including the interest accrual, and 10.81% excluding the interest. Whereas the NNP of the company stands at 3.88%, which includes the interest on NPA also, which we have shown on the higher side. Whereas if we exclude that interest, the NNPA stands at 2.94%. This has been done because of one ARC transaction of 235 crores, which the organization has done in Q2. The company has done this ARC transaction with Phoenix at a valuation of 50%. The overall PAT of the company for H1 stands at 101 CR, which remarks a very remarkable growth of 210% as compared to year on year. The return on assets stands at 17.17%, again making a significant growth of 391% as compared to year on year. The GNP and NNP, which we have already spoke, the company is having a very healthy CRAR of 35.41% as we speak, with debt to equity of 2.69 times only. The company has been successfully able to give EPS of 50.59 rupees, whereas return on equity stands at 60.59%. The company has generally operated at an LTV of 80.56% during the quarter. The growth in the AUM, as we have seen, if the business number has increased in Q2 because of one ARC which the company has been done. We can see a portfolio has been de-recognized from the book in the Q2 itself. That's the reason we are having a lower AUM. but that is something, which we have already planned for in Q2 itself. The company is having a PCR now at 75%, which is still higher as we compare to the industry. Our peers are operating at 60%, but we have taken a conscious call to keep the PCR of as high as 75%. Earlier, we used to operate with a PCR of 85%. There has been a significant growth if we compare to the Q1, if we compare to the Q2 of the last financial year in terms of ROA, 3.5% has become 17.2%. And in terms of ROE, 17.8 has become 60.66% for this quarter. The EPS, as I said, stands at 50.6 rupee, which if we compare it with the Q2 of the last financial year, it stood at 11.1 rupee. The net owned funds, which when we started this financial year, we are having an own funds of 489.30 crores, which are now standing at 590.40 crores. The company, has been able to successfully manage their NPAs, wherein, at the start of the year, we were having an NPA of 435 crores. At Q2 ending, we were having an NPA of 424 crores. After recovery or after having a pool sold out of 235 crore, the company is having an GNPA of 194.44 crore as an absolute figure. If we talk about partnerships, which I already said in the Q1 of this financial year, the company has been able to successfully sail through with the partnership in this quarter as well. The total outstanding for all the partnerships that the organization is having in terms of co-lending and all, we are having an outstanding of 333.58 crores. Out of that, we record that there is not even a single case which is NPA, which is a very good sign in terms of partnerships of the company. Liability front, as I told, the company has been successfully able to roll over all its working capital demand loan in this quarter as well. Whereas, we are also attracting the new facilities. While attracting the new facilities, what we have done is the incremental funding which the organization has raised in the Q2 of this financial year, we have been able to see a decline in the overall funding cost of the company by 0.10%. If we talk about the mix of the funding which the organization is having, obviously out of 1570.63 CR of funding, the bank loan plays a very important role, wherein we are having approximately 962 crores of funding from them. Whereas in terms of say securitization, though the company has not done any securitization in this financial year as well, due to the fact that we have done the securitization in the last financial year, the outstanding remains a very significant of approximately 264 crores. Whereas a combination of MLDs and NCDs that we have raised in the last financial year and some portion that we have raised in the Q1, it stood at approximately 250 crores. In this quarter, what we have done, exceptional, that I'll say, apart from the ARC, is we have made our fixed deposit rates, competitive in our state. We have compared those rates with all the NBFCs and the banks which are operating here. Basis on that, we have increased the rate, and we have been able to attract funds from FDs also, and plan in Q3 and in Q4 itself is basically to get more and more funding from the FDs, so that we can have a significant impact on the overall cost of funds of the company. As far as the total ECL is concerned of the company, the company is maintaining a significant ECL as compared to the IRAC norm, which has been prescribed by the RBI, which is a very, very good sign in terms of the overall portfolio of the company. We are still 25 crores higher than as prescribed by the IRAC norm of the RBI. These are the financial feats which I wanted to share before I would like to hand over this call to our CEO to give you more insights on the business of the company, business of the company in the Q2 and the H1, and how the business will grow in Q3 and the Q4 as well. Over to you, Muthoot sir.
Thank you, Ramandeep. and good morning, everyone. I hope I am audible.
Yes, sir. Yeah.
Okay. So once again, good morning, everyone. And as our CFO Raman has already put up very clearly that our business numbers jumped almost from 200 crores in the Q1 to 330 crores in Q2, and we have very favorable tailwinds going into Q3 with the festive season. So we are already looking at closing at close to our Q1 numbers this month itself. The month of October and November is expected to be much better because of Diwali happening across the country. So I think Q3 we should close somewhere close to 600 crores of disbursement. And of course, so we will have maintain the momentum. So now our team is also in place in most of the markets. We've finalized very good partnerships, which, as Raman had pointed out, is doing very healthy business for us with zero NPA. Some of the things that we are going to do in the quarters to come is going to change the pace of our organization per se. So we are creating 4 different SBUs under our company. So two-wheeler will become an SBU, used car will become an SBU, LCV will become an SBU, and digital sales and retail liability will become an SBU with independent teams of sales, credit, collections, everything within each of these verticals. Now we have a common sales, credit, collection for most of these because the volumes were low. But in Q2, we started doing very well on used car. We hired our entire team across. So maybe by the end of Q4, we will have all the 4 SBUs working independently because we want to scale up business on each of these 4 lines. That is going to be really a game changer for our organization in terms of growth of business, growth of AUM. As Raman already pointed out, after a ARC transaction, our book is looking very healthy now. So that is going to help us very strongly when we go to bankers. And that we already started seeing results of that in terms of reduction in our cost of funds. Q3, Q4 are going to be really exciting for us. Also, our flagship company, which is Muthoot Concall, till now we were working with them on a DSA kind of an arrangement where they were doing business like any other dealer or DSA with us, and we would share some commission to them based on the market standards and based on our arm's length distance that we need to maintain for our group company. But we are now getting into a new model with Muthoot Concall, which is a BC model, where they will also be engaged in collection for us. So that will be kind of they will do through the entire life cycle of the loan they will service. That is right from sourcing to collection to issuance of NOC, foreclosure and everything. And that model will bring a lot of benefits for both our companies. One, because the branches will have a significant share of income going up due to this tie-up, and this whole business will go up. The whole objective of this is that in the past we have done larger numbers from there, but since the branches have now diversified into multiple products, they have somewhere lost the focus. This is going to bring back the focus, and we are expecting MFL business itself to contribute about 5,000, 6,000 numbers to our overall volume per month. I think we are looking at very exciting times ahead, and we are really confident of the next 2 quarters and the next year as we see it. Thanks. Over to you, Raman.
Yeah. Shweta, we can go for questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yash Agarwal from JM Financial. Please go ahead.
Yeah, so good morning. I have a few questions. The first question is, the numbers excluding this exceptional item, that is the write back, seem slightly poor because the PAT run rate is down from 24-25 crore to 16 crore. And even the ROA run rate is, excluding the write back is about 2.2%. So where do you see this, firstly, the number settling in the next few quarters and obviously for the full year of FY25? My second question is, the yield on advances has declined from about 19.5% to 16.7%. So, firstly, what is the reason for this decline? Because the interest rates, everywhere are going up, even your cost of funds are going up. What is the incremental yield on disbursements that we are doing? That's the second question. And the third question is, we spoke about a 2,500 crore exit AUM by FY24. We are at 1,770 crore now. So the disbursement run rate of 600 crore that you spoke about in the third quarter, would that be sustainable in the fourth quarter and FY25? And what is the revised AUM guidance for FY24 and FY25? So these are my three questions to you.
Yeah, so I'll take it. First of all, yes, thank you so much for asking this question on the exceptional item. I'm very happy, someone has asked, as the first question itself. See, yes, what happened is, exceptional items are the items which Ind AS says that you need to show it in face of the financial, so that reader of the financial statement should know that something extraordinary has happened, which organization want to highlight it. Now, if we talk about 16 CR of profits, right? You are comparing it with the last quarter in which we haven't done any ARC. Now, say suppose if I have not been able to do the ARC, then what would have happened is the impairment reversal, which you can see in the exceptional item, would have gone up, which means my then my PAT would be somewhere around 28 odd TCR. How? Because now the reversal of impairment has come to the exceptional item, as I have shown, because on this 235 crore of the ARC pool, any impairment which has happened in the Q2 has also gone into the impairment reversal in the exceptional item itself. Whereas if we haven't done any sort of ARC, that reversal would have gone up in the normal impairment reversal. So that's I hope that answers your first question.
Sure. And what is the ROA going to look like in the next few quarters?
So So if we talk about return on asset in the next 2 quarters, it would be somewhere around in the range of 12 to 15 odd %.
The quarterly ROA that you're talking about?
The quarterly one, yeah.
Okay. But so what is going to be a sustainable run rate? Because, excluding all these impairments and all which are done with on the, the loans which were given possibly pre-COVID or during the first wave of COVID, what is the sustainable ROA run rate that we are looking at?
If we talk about that, in last 18 months, what we are doing is, firstly, we are speaking about, NPA, so NPA of the organization is higher, right? Then we are taking the steps of recovering this amount from all our clients and all, and we are putting all the effort. Last step was to do the ARC from the books. Now, since we have done with all sort of things, if we talk about only if we exclude the impairment from our financial, our ROA would be somewhere around 7 to 8%. That's what we are thinking. That's what our match phase.
Okay.
Right. And second thing is, yeah. Second thing is, you talk about. Sorry. You talk about this yield which is getting dropped. I'll tell you. What's happening is, we have a portfolio which is a combination of NCSL own portfolio and the co-lending one. So when you increase your co-lending as well, so overall yield become an average yield. So whatever business that we are receiving from the co-lending partners, as I said, it has a 0 NPA, right? So because of that, we are receiving some lower yield on that portfolio. That makes my average yield on the lower side. So hire the co-lending partner, hire the business that I'm doing from the co-lending partner throughout the country. I will be receiving a yield which will be lower when I am doing this business from MCSL itself. That's the reason overall yield has got down. Your third question was on the cost of funds. As I said, in Q2 itself, we have seen some drop there, and we'll also see the same drop in Q3 as well. The only thing is, which we have also added, to drop this cost is basically our FD. As we've increased the rate of fixed deposit, the overall cost of fixed deposit to the organization as a whole will not go more than 9.40% on ex-IRR basis. So again, the funding that we'll receive from fixed deposit, will help the organization in bringing down this cost of funds. So I hope these three questions. Now, fourth question on the AUM. As I said, at the start of the call, we planned this ARC, in Q2 itself. Why? Because of the evaluations that we are receiving, and the second thing is that, we wanted to take this call because of the fact that our cost of funds are increasing every quarter. So bankers may not see your NNPA, but yes, they will 100% first, they will start about, your gross NPA is on the higher side, you need to take a call on that. So that's the reason, we wanted to take this call, and we have done this call. Second thing is, as Sir has already said, we are targeting for approximately 500 to 600 CR of business in Q3. Q3, why it will be on the higher side, as Sir has said, it will be a festive season around the country, so we are expecting some higher number. On a normal routine, we are expecting somewhere around, 450 CR of business per quarter, and specifically in Q4 as well. So if we talk about the revised AUM number that we have completed, it would be somewhere around 2,200 crores. Secondly, and the last thing, since we have done ARC for only 60% of the portfolio, which was my NPA, if we take a call, because we have done this transaction to attract a lower cost of funds, still we will be asking from PSUs and all. If we take a call we might take a call in Q4 as well, wherein, to exclude the remaining portfolio from the NPA as well, and to do a fresh round of ARC. So that call has not been, we will not say yes to it as of now, but yes, as and when, situation will arise, we'll be 100% taking that call as well. So revised guideline, excluding any ARC, would be 22 to 2300 odd CR as of March 31st. Will be my email.
And my final number is question would be on the current level of OPEX that we have. So I think we are doing 40 crore of quarterly OPEX. So
yeah,
how much would that increase with the year? Because we used to do almost 2,600 crore of AUM on the current OPEX run rate. What would the OPEX look like once the book expands further?
See, as we speak, if you ask me, as far as OPEX is concerned, OPEX will only amortize because we have already built a team to do a business of approximately 2,500 to 3,000 CR a year, right? So OPEX will not increase, that's for sure. And, if anything that has to go up in terms of OPEX is basically our, as our CEO has said, that we are going ahead with the used car as well. So if we have to hire resources for the used car, that's the only case which I can see that, there will be slight increase in the OPEX. Otherwise, for my two-wheeler business, this OPEX will only get amortized over a period of time.
And so incrementally, the 500-600 crore disbursement, what is the mix between two-wheeler, co-lending and used vehicle?
So yeah. So I'll say, 60% would come from the MCSL itself.
That is two-wheeler.
Right? Two-wheeler, right. And, remaining would come from the co-lending. If we talk about, used car will remain, slow till March because it's only 4 months, that we can do, and it would be somewhere around 4 to 5% of the total portfolio.
And what are the yields between the three products that you spoke about, the incremental yields?
Yeah. If we talk about, since I have said, 60% would come from MCSL, so we can expect a yield of 24.86%. We would like to maintain the same. From co-lending, I would be expecting a yield of, somewhere around 14% And from the used car, again, 15-16 odd percent, that would be the incremental yield.
Okay, sir. Thank you so much for answering all my questions.
Yeah. I hope that exceptional item is clear, right? Yes?
Yeah, it is.
Yeah.
Thank you.
The profitability has gone up. That's what I wanted to say.
Okay.
Thank you very much. A reminder to all participants, you may press star and one to ask a question. The next question is from the line of Aditi Rao from InCred Asset Management. Please go ahead.
Yeah, hello. Am I audible?
Yeah.
Yes, sir. I had a few questions. So first of all, so why has the repayment rate has been so high for us, so that they completely nullify the new disbursement? So if we see in this quarter, we had 328 crores of disbursement, but if we remove the ARC sale and even after that, since we have seen degrowth, this shows that we had repayments of around 318 crores for a disbursement rate of 328 crores. So why has it been so high? Secondly, there has been a sharp reduction in the number of live customers. So so it has reduced from 4.7 lakhs to 3.9 lakhs. So I just wanted to ask a reason for this. And and lastly, one question on so there has been no increment in the AUM which was brought in by the existing co-lending partners in the last quarter. So like even if you see the Wheels EMI partner, they were at 216 crores. They are at the same amount even in this quarter. So why has there been no increment in the new AUM brought in by them?
Sure. I would like to answer all these three questions. First is basically you have spoke about the repayment, why repayment is so high. The answer to this is basically since the loan time period of two-wheeler is only 2 years, right? That's the reason, the cases, which has to be matured, right? And now we always expect, 100 CR of repayment every month has to come. That's an average repayment. If you say second thing is, I think you have spoken about, the number of clients has also gone down. 78,000 has been 78,000 clients have been sold to the ARC. That's the reason, 4.7 has become 3.9. Third thing is basically on the co-lending front, where you have asked about the Wheels EMI. Yes, Q2 was a bit slower for them, but in Q3, they have already done, 40 odd CR of number as we speak. So they will be doing somewhere around 150 CR of the additional number in this quarter as well.
Okay. And the new guidance that you are giving of around 600 crore disbursement. So I just wanted to ask if that is achievable, because even in this quarter we had Onam there, and we were already very gung-ho about this adding a lot to our AUM. But we were able to add 300, and now we are guiding of almost double that of the previous quarter. So would this be achievable? Because even in the last year, in the same quarter, we were able to achieve somewhere around 300 to 400 crores only. So do you think it is achievable based on
in the same quarter we were
Raman, I will take that question. Thanks for that question. See, you are right on the Onam part, but the fact is that Onam in Kerala has been one of the lowest in the past, I think, in the past few years that I can think of. Kerala normally does about 1 lakh vehicles during Onam, and a normal average is about 75,000 vehicles. Onam, Kerala did only 50,000 vehicles as a whole. Our market share has gone up, but since the market itself did not grow, we did not get the growth as expected. However, Diwali and this festive, Puja and Diwali, are a pan-India phenomenon and not specific to Kerala. Kerala is a very, very small part of the overall thing. So if about 13 lakh vehicles get sold, Kerala sells 50,000. So only that market is where we were banking on for Onam. But on the contrary, for Q2, Q3, where we just had the Dussehra getting over, and we already seen very good numbers this month. So we should close at close to 150 crores of disbursement this month, October. And November, we will cross 200 crores easily. So that guidance that we are talking about is achievable. And on the second part, what was the second question?
The reduction in the number of live customers.
That already Raman explained to you, no? That 70,000 odd customers were sold to the ARC. So, but on the incremental business guidance, yes, we are confident of getting to that numbers.
Okay, so this quarter we'll be able to see an increment in the AUM by the earlier partners as well.
Yes, definitely.
Okay. Got it. Thank you.
Thank you very much. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello. Am I audible?
Yeah, Deepak.
Yeah, hi. Thank you very much, sir, for this opportunity. So, first of all, I just wanted to understand, I mean, if you have to look at last 8-9 quarters, our AUM or advances has been around 2,000 crores. I mean, plus minus somewhere 50 crores. So I mean, what is stopping us from? Is there any structural problem in the company, or what is stopping us to grow? I mean, last 9 quarters. I mean, the industry still has grown. I mean, it in the lower single digit, right? I mean, what is stopping us to grow?
Okay, so I'll take that question, Raman.
Sure.
Yeah. So, see, as you are aware, there was a complete change in the management, and for some time, we were not growing at the required pace that market was growing at. But if you look at, whole of last year, we were growing at only at a neck and neck pace with our collection. So we were disbursing about 100 crores a month, and we were collecting about 100 crores a month. So the AUM had not grown. And that trend continued in the first quarter as well. We disbursed 200 crores and we collected around 300 crores. But since then, we've been able to buck the trend. So in Q2 was one of the first quarters where we actually disbursed more than we collected, but though the volume was very less. This month we will this quarter we will collect 300 crores, but we will disburse close to 600 crores. So there is a straightaway jump that is going to get added. And subsequently going forward, we will continue that momentum, because now in Q1 our staff productivity was about 4.5 units per staff. Now it has jumped to 8, and Q3 we will bring it to close to 12. So that is now we are focusing on the productivity of the staff, and that will obviously lead to this one, the increase in disbursement. The only issue earlier was that because of this change in management, and already there was a inertia in the system which has stopped us from growing. But you should look at what is happening from Q2 and beyond, and that is going to be positive for the company. That is point number 1. Point number 2 is the fact that all the additional product lines that we are starting. So we have been a two-wheeler loan company for a far too long period, which itself I think we could have probably brought in those changes earlier. But now we've gone all out. We've decided that we are doing it. It's already, the entire used car team has been set across the country. LCV we are adding up as a new vertical because we see a lot of business potential there within our customer segment. So once that also comes full-fledged, we'll have be firing on all the 4 cylinders. So going forward, things will look very positive, and it's already started looking positive.
Okay. So I mean, third quarter, 600 crores of disbursement, 300 crores of collection. Do you expect the same thing for fourth quarter as well? I mean, 600 and 300?
In fourth quarter, there is no festive season or anything to do that. But I am banking on, by that time, we will have reached the productivity of closer to 50, which will give me that growth. So this time, while I am still building on my productivity, I have an advantage of the festive season boom, which will come in. Which already we saw some parts in October, and November we are expecting to be really big. All the dealers that we have spoken to are very, very gung-ho about it. But by Q4, the existing team would have reached that productivity level of closer to 15. Plus, we are also adding partnerships, so that will help us sustain that momentum.
So what is our disbursement and collection target for fourth quarter?
Fourth quarter, we will be disbursing closer to 500 crores, 500 to 600 crores, anywhere between 500 to 600.
And about collection?
It will be same range, sir, 300 to 350 crores.
300 to 354 crores collection. Okay. And what is our ARC target? I mean, you said that we might look at fresh ARC for remaining 40% of AUM in the second half. So what is our ARC target for second half? Is that something that we have set for ourselves?
No. See, I'll say that again. See, based on the what is the feedback that will receive from the bank or PSU, that you need to further bring down your NPAs and all. Then we will take a call. Otherwise, we'll not take a call of doing another ARC.
Okay. So in case we do any further ARC, then our like 200, 300 crores ARC, if at all we decide.
No. The remaining pool is somewhere around 160 odd crores.
Okay. So if at all we decide that we do this 160 crores ARC as well, so our AUM will slip away to 2,000 crores, right?
Yeah. 160. True.
And in the last con call, I think we had said that we'll grow by about 15-20% PAD growth on a YOY basis and ROA of 4.5 to 5% in FY24 as a year, as a year as a whole. So how do we change that?
No. So in terms of that, if we remove that reversal of impairment itself, I will stick on to the same number.
No, so that's one off, right? I mean, you have to exclude that number.
So I'm excluding it itself.
So excluding that, we are targeting 15-20% PAT growth?
Yeah.
Okay, no, so because if I exclude that, my PAT number this quarter would be close to about 15-16 crores. So first half is about 30 crores.
Sir, that's what I have explained, That PAT number that you are seeing is 15-16 crores is basically 25 crores because the component of impairment has been transferred to the exceptional item there. That's an 8-9 CR of component that we have transferred from upper layer to the to the exceptional item. That's the reason you are saying PAT on a lower side.
Okay.
If we exclude that, if you compare apple to apple without having an ARC, then yes, company was having a profit of 26 crores in this quarter as well.
Okay.
The only thing is that impairment of 8-9 CR on the normal core portfolio has taken the gap of the impairment reversal as an exceptional item.
Okay. Yeah. Okay, I got it. So ROA also 4.5 to 5% we maintain.
True.
Fair enough. I think that's it from my side. All the way best. Thank you so much.
And also to add to this, I think we are not too much fixated on the AUM as of now. We are saying we are doing the right things for the company. So in terms of increasing disbursement, increasing productivity, bringing NPA down. So there's been a slight difference in what we had told about the AUM from because of this ARC. So whether the second ARC will happen or not, that is something which we are taking a call on. But overall, we will continue to do what is right for the company. That's more important.
Okay, understood. Fair enough. Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Pankit Shah from Dinero Wealth. Please go ahead.
Yeah. Hi, sir. Good morning.
Hey, Pankit. Hi.
Yeah. So, actually, can you throw some more light on the new model which you talked about with the parent? Right? How which products are going to be there? Are these products exclusive to Muthoot Capital? And how the NPA is going to work there?
Okay, so I'll take that question. So we are getting into a business correspondent model with our flagship company, Concall. The objective is that they have a huge branch network of 4,000 plus branches. Currently, we are doing about 1,500 to 2,000 vehicles per month from that network alone. One of the reasons that we identified was that, like in any branch model, even it's a branch banking model for a bank, there are multiple products that we have to sell. So Muthoot Concall branches also distribute about 20-25 products on different, not MCSL, but different company products, third-party products, etc. So the amount of focus that they were getting on two-wheeler as a product had come down. Okay. So we worked out, the management of both the companies sat down on the drawing board and worked out on bringing back that focus, and we arrived at the fact that whatever is actually going to contribute to their profit is what is going to drive them. So we said, okay, let us make them a partner in this whole thing and not just a one-time payout model. We make them a partner because there are multiple times when they become a partner, what happens is they cater to the entire life cycle, which means customer walks in for a gold loan, he's cross-sold a two-wheeler loan, and from there he continues to, since he is a neighborhood customer, he continues to come walk into Muthoot Incorp and start paying the EMIs every month. Every time we walk in, there is a cross-sell opportunity till the time that an NOC is issued. NOC is also getting issued from this thing. And in the whole process, since the involvement of the branch is so much, we share a part of the AUM. So the customer, so the branch always looks at what is my AUM. Is it going up or is it going down? Otherwise, he would have closed the loan and he would forget about it. He has nothing more to do with it. He has taken a one-time payout. Now he will continue to monitor the books. He is responsible for collecting also. Okay. So he is the branch manager. So there are 4,000 people tracking the AUM against somebody who's managing third-party business in FinCorp, who is just tracking disbursements on a month-on-month basis. That is the change that we are bringing. We are bringing the change in that outlook. So that is going to trigger the next level of growth for this channel because it's our own internal channel.
Okay. And the AUM, as you said, at the FinCorp level, but complete AUM would be recorded for Muthoot Capital, right?
Complete AUM will be booked on our books, but they will be shown a shadow AUM. Based on this, they will get the income.
Okay.
Today, if they disburse an 80,000 loan, they get whatever percentage on the 80,000 loan as a one-time fee. That's all. Here, the AUM will keep building as they do more and more loans. That shadow AUM will be, so a branch manager can see that today my AUM on account of two-wheeler loan is so and so, and therefore I will get a recurring income on that. It will become an annuity income for him as against the one-time rental income that he is getting now.
Right. So the profit share also would be throughout the life cycle of the payment.
Yes.
And these do we also source used four-wheelers and LCV from the same?
We will source all our products through branches because see, Muthoot Incorp branch is like a neighborhood bank for many customers. So in fact, we had run a campaign to we saw that about 40% of our collections were happening in cash, and only 60% was coming through NACH. So we thought that, okay, we can save a lot of money by converting these customers into NACH mode, etc., and we run a campaign. And when we started calling the customers, we understood that these customers are saying, no, if I have to pay through NACH, I have to go to the bank and pay, which bank is farther away from me, but your Muthoot Incorp branch is next door, I can go and pay there. So we understood that they are paying because of their affinity towards that branch and that brand, and which is what we are trying to now capitalize on through this model.
Okay, got it. And these used four-wheelers, LCV, these products are exclusive to Muthoot Capital within the group company?
Yeah. None of the companies do competing lines of businesses. All the four NBFCs that we have under LPG are in two distinct businesses. We don't compete with each other.
Okay.
And so automobile is fully the forte of Muthoot Capital Services.
Sorry?
Entire automobile business is the forte of Muthoot Capital Services alone.
Okay. And does personal loan come into our picture?
Yes. We have two-wheeler, car, new and used, where new we will not be very aggressive on because of the rate. LCV, new and used, and personal loan on the lending side.
Okay. So probably, say 3 years, 5 years down the line, is there any particular target that we have set for used cars, LCV, personal loans? Probably the opportunity size is much bigger as compared to a two-wheeler, where we are there currently.
Our vision our vision, our chairman's vision is a 10,000 crore company in the next 4 odd years, of which approximately 4,000 crore will be the two-wheeler loan book, 3,000 crores will be the used car and LCV book.
Okay. Okay, and balance 1,000 can be a personal loan.
Yeah, personal loan and all that.
Okay. Great. Yeah. And I think last thing, if you can throw some light on the competitive intensity. We have been seeing that competitors like say Shriram or the financial arms of the OEMs have been growing consistently, especially they have an edge also with the dealership. So with regards to two-wheeler, how should we see that?
We are also growing. So our presence in the overall industry is around 2%. But if you look at only the places where we operate out of, we are around 7%. And this 7% has gone up from April it was 5%, now it is 7%, and we are growing. So it is only a function of how aggressive you are out there in the market. And you can automatically increase your share. So you have to be present, that's all. You have to be present, you have to be visible, you have to be competing, that's all. In between, we had pulled back, and that's why we lost share. Just retaining all that.
Okay. So just being present and being competitive itself will lead to growth.
Yes.
Okay. In fact, last thing, if you can repeat the 10,000 crore mark which you said, what is the timeline and is there any way for that?
It's a say 3 to 4 year horizon.
Okay.
So the first thing that we have done is to hive out all these units as SBUs with a independent business head, credit head, collection, operations, everything. So that will happen by April, March or April of this year. April of next year, we will have put up this entire structure in place. So what we have already done is hive out the sales team. And gradually we will add credit and collection and operation. So by the end of next year, we should have this complete independent 4 SBUs running these businesses.
Okay.
So we are hiring the people from the market for this and making them run this show.
Sure. I assume that
also what we have done, we are doing as a part of our expansion is that earlier we were, saying that, okay, since we are based out of Cochin, headquartered in Cochin, we will, everybody has to sit here, etc. So that was bringing some amount of limitation for us because you don't get all that talent in Cochin. So now we have decided that all businesses would be based out of different cities. For instance, LCV is a big one. All the big players like Shriram, Chola, Sundaram, all of them are based out of Chennai. So we will have that business based out of Chennai. Two-wheeler, we will have it based out of Delhi because the person whom we have identified is out of Delhi and we will be able to manage that. So we are now becoming open to that. So horses for courses, that's what we are like going forward.
Okay. And what I assume is that large part of the growth from say 2,000 crore to 10,000 crore, 5 years, that's like a 5x AUM growth. Majority of it will come from Muthoot Syncorp branches.
A good percentage will come from Muthoot Syncorp branches. In fact, it varies on product wise. So on that also we have a roadmap. So on some products, Syncorp will be able to contribute more than some other products. So the plan, the blueprint that we have made has a channel-wise contribution that is projected, and that's what we will be driving. So how much of it will come from co-lending, how much will be through our own team, how much will be dealer DSS, how much will be digital sales. We are also putting up a digital sales unit. We are getting into partnerships with few marketplaces like Bajaj Marketplace, Sarat Pay, to be present on their site. So one, it will generate leads and business, and two, it will help us catch more eyeballs. So there's a few of things that we are doing to reach this number. So there is a plan for all these.
Okay. Okay. Great. Great. Thank you so much and all the best.
Thank you.
Thank you very much. We will take this as the last question for the day. I now hand over the conference to Shweta Daptardar for the closing comments. Please go ahead.
Thank you. On behalf of Elara Capital, we thank the management of Muthoot Capital to give us the opportunity to host the earnings call. Thank you, team. Thank you all.
Thank you very much.
Thank you, Shweta. Thank you all the participants.
Thank you.
Thank you so much.
Really looking forward to your support, continuous support going forward. Now again, thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference call. Thank you for joining us, and now you may disconnect your lines.